Hey guys, Jeremy Parman here. Welcome back to my channel. As you know, I've created a passive income of over $50,000 a month in rental property income. My portfolio is worth over $6.5 million. I've done all this while working a full-time job. And on my channel, I'm going to teach you how you can do it too. The current administration has just outlined some of the elements of their new tax proposal known as the American Families Plan. They're trying to figure out how to pay for the $4 trillion infrastructure plan and the stimulus packages that we've just had. And there's three important pieces to this that just came out yesterday that are threatening real estate investors and homeowners. I wanted to highlight those for you as they're developing. The first one is 1031 exchanges. They're looking to do away with this or significantly reduce this. This is a tax incentive where if you sell a property and you buy another one, you can just roll that gain in there and defer paying taxes until you sell that property. They also want to tax if a family inherits a property, they want to tax that property. And they want to significantly increase the capital gains tax as much as double what it currently is. These three things are massive blows to homeowners and real estate investors who have been incentivized to invest in this great country since the 1920s. How is this going to impact the real estate market and the value of your home and your properties and your investing? Hey guys, Lily wanted to show you her new haircut, and she also wanted to thank you for helping us reach 6,000 views since our last video. She also wanted to remind everyone to smash the like button so that the YouTube algorithm will share this with other people who can subscribe while we're trying to reach our first 1,000 subscribers. Every time you put a comment in and forward it and hit the like button, you registered another chance to win the Apple AirPod Pros. So check out this article in Bloomberg. Biden targets 41 billion tax break for rich real estate investors. I highlighted some pieces in here I wanted to show you. They want to cut tax breaks that allow investors to keep buying and selling properties without paying capital gains. They're taking aim at real estate investors who have used buying and selling properties without having to pay capital gains taxes. So let's talk about this a minute. It's not that you don't have to pay, it's that you defer them. So if you trade a small, let's say $100,000 house and you want to sell it and buy a $200,000 house, the 1031 exchange allows you to do so without having to pay taxes and use all of that sales money to go into the next house. Now, when you sell that next house, you can do the same thing again, or you can sell it and you pay taxes. So you still owe taxes. I wouldn't call this a loophole at all. I would call it an incentive for Americans to invest in this great country and for people to buy bigger and bigger properties. If you had to pay a large amount of tax on it, say 40%, for example, and you had depreciated the entire property, if you sold that $100,000 house, you'd have to pay $40,000. You'd only have $60,000 to try to buy that $200,000 house. So the president's new economic plan calls for abolishing the right to defer certain tax payments on property investment gains over 500. So they're not looking at getting rid of the entire 1031 exchange, just for gains over $500,000. And I assume that's on each property. That may also be within 1 calendar year. I'm not sure about that. We'll see how the details come out. So it's also known as a like-kind exchange. This deferral can theoretically continue indefinitely until the investor's death. Now that may be a little more of a loophole. And so currently, if you own a family farm and it passes to the heirs, they don't have to pay tax on that. The basis steps up to whatever it's currently worth. If it goes up in value later in the family sales, they would owe taxes on that unless they did the same 1031 exchange. But if an asset passed to an heir, the capital gains bill is often wiped out. Now, I don't think that's such a bad thing, because if you inherit your family's farm, you don't want to have to pay $100,000 taxes on it. So the congressional committee did some math on this, and they figured that investors save $41.4 billion between 2020 and 2024, but they don't break down how much benefit applies to gains below 500,000 and above 500,000. And then here's an excellent point. But the biggest beneficiaries of this current rule are individuals. Corporations are only benefiting about half as much as individuals. So when they go on to say, we're going to tax the super big guys, that's not really the case here so much. Yes, it might be real estate investors who are above average income, but it's not talking about ultra wealthy people either. The small real estate investors won't be impacted, since you'll still be able to do gains under 500,000. So a lot of us small guys like myself will still be able to do this. I actually tried to do it one time and I failed. I didn't do my research properly. I knew you had had to have a third party involved. And so I took my check from closing and I sent it into TD Ameritrade, put it in my brokerage account without even cashing it in my bank. I was going to let it sit there until I bought my next property. And I mentioned it to my CPA and he said, no, you have to give it to a unrelated third party you've never done business with that does this specifically and who has total control of this money. If it's in your brokerage account, you actually have control. And so I had tainted the transaction. And so I had to pay 15% capital gains tax on that money. I think I made about a little over $100,000 on selling a house. A 15% tax on that with a capital gains rate is a bit of a gift anyway, so I wasn't that upset, but it would have been nice to roll that into the next property that I bought without having to pay any gains there. So this 1031 exchange has been around for a long time, since 1921. It was a tool designed to help small businesses that would allow them to upgrade their facilities to fit their needs without facing big bills. It makes total sense. And so there's a lot of people who have been buying properties and counting on this strategy and this incentive. It may be pulled out from underneath them when they're finally trying to use it. It's going to be a big deal. So there was a study in 2015 that argued some negative consequences, including reducing the liquidity in the market because holding periods would increase. So if you're going to have to sell it and pay taxes, people might tend to hold it longer. And I believe that. They also suggested that real estate investment would decrease, right? So if there isn't these incentives to do this, people will look for other places to invest their money, such as the stock market or other countries for that matter. So property prices would fall in the short term and the rents would rise. And there's another article I want to show you. The tax proposal could be a double-edged sword for real estate homeowners and investors. Americans could see reduced returns on certain property sales. So as a follow-up to the infrastructure package, I've heard as much as $4 trillion on this, by the way. Even people in middle class in an expensive market could sell a house and have $1 million capital gain. In California, I think it's hard to have a single family home in some areas around LA for under $1 million. So if a family had one of those for as little as 10 years, or if it were to be inherited and you were to sell it, it'd be easy to have $1 million capital gain. So in this new proposal, it's taken the capital gains tax rate and doubling it from 20% to 39.6%. So you can't defer the gain with the 1031 exchange anymore. You got to go ahead and pay tax on it now. And the tax that you pay now instead of deferring it has just doubled. So it's a double whammy. Additionally, the Biden administrative has called for an ending of the step-up cost basis for the real estate when it's inherited. Here's the third piece, right? So if you inherit grandma's house or the farm, you're more than likely going to have to pay capital gains on the entire amount of the property potentially if you were to sell it. Under the current tax laws, the stepping up allows the heirs to calculate their gain or their capital gain on the sale of a home or other property using the current market value at the time that they inherited it. And that's kind of fair. You inherit a piece of property, you shouldn't be responsible for paying capital gains on your deceased relative's gain. It kind of starts over. You could sell it and not have to pay any. So these proposed changes aren't going to hit everyone, but it's going to impact the real estate market considerably. And the housing market makes up a massive percent of the U.S. economy, and it's roughly 15 to 20%. For some people thinking about selling in the next few years, the policy may entice them to sell their investment property sooner. There might be some people that in the short term go ahead and sell and take advantage of the lower tax rates, say by the end of the year or by the end of next year, depending on when this new legislation might take effect. People may also try to do a 1031 exchange temporarily if they were going to do one. Any of those temporary things could help the market by giving some more supply out there. That would have downward pressure on prices. I fear the policy may lock investors for a much longer period of time than the current rate. It would be counterproductive, helping free up inventory. And I agree with that. I think if you take away multiple incentives, add some insult to injury here, I think investors are going to they're going to sit on their houses and they're going to wait. They might wait for another administration or new tax laws to come around. I don't think they're going to be jumping at a chance to sell and pay a huge capital gains tax rate. And alternatively, some argue higher tax rates will simply cause wealthier Americans to reevaluate where they park their money. Totally agree with that. Here's another one. Eliminating the 1031 exchange could lower property prices. It's been a cornerstone of commercial real estate investing. There was a report in 2020 from the National Association of Realtors that found that about 12% of the transactions involved a Litecoin exchange between 2016 and 2019. So imagine those going away. Imagine 12% of the transactions or demand coming out of the market. And that would hurt prices. So again, the large beneficiaries of these policies in the past and currently have been small investors. Nearly half, or 47% of the properties were held by investors in sole proprietorships or one-person owners, while only 37% were S corporations or larger businesses. Eliminating this provision would likely lead to downward adjustments in property prices, that investors may hold on to properties for longer. I totally agree with that. Residential real estate markets would be impacted. Slightly more than half of the properties involved in 1031 exchange were residential properties. I totally agree. Don't forget to smash the like button if you like this video, so this video can be shared with others. Please let us know in the comments what you think is going to happen with this legislation. If you think any of these provisions will be better for the economy or worse, please subscribe if you haven't, and please forward and share this with others that you think may enjoy this content from this channel to help us grow.
So thank you for watching. Although I am a licensed CPA and have 3 business degrees, I'm just a guy on YouTube with my dog, so be sure to consult with your professionals before making any investment decision. Until next time, thank you.